Hey, if you are in the market for a new home, now might be the time to buy. A new report from the Federal Home Loan Mortgage Corporation reveals average U.S. mortgage rates have fallen below 6%, the lowest that they have been since September of 2022. So what does this decrease mean for the market? Bankrate senior analyst Mark Hamrick is back with me now to break it down. So fixed mortgage rates have been sitting around 7 to 8%. Mark, why are the rates suddenly a little bit lower?
Well, we've seen a lower drift in mortgage rates over the last few years, and think about the fact that we had mortgage rates as well as other interest rates very elevated because, among other things, we were in a period of high inflation, and we still have elevated prices, but inflation as a trend has been coming down. And so all those things work in lockstep, in a sense, to bring mortgage rates lower. And think about the long-term consequences as well, Lindsay, where going into the pandemic and in the early stages of that, we were talking about the 30-year fixed rate mortgage in the 3% range, the high 2s, and then we popped all the way up to 7% plus. So this news about getting below 6%, I think, first of all, we're talking about it. Other people are talking about it. It's an important psychological benchmark. It also has relevant aspects when we talk about affordability.
And yeah, let's talk about prices. I think a lot of folks say, okay, well, the home values, we saw them go up, but now with these lower rates, how does that impact the prices and how much buyers have purchasing power?
The prices don't always move accordingly, and we know nationally home prices are up about 50% from early 2020. That's a lot, but real estate is as local as it gets. So if somebody's out there, whether they're watching locally or across the country, I'd say your results, your locality may vary, and that's absolutely the truth. But the other part of this is now that we've sort of, at least for now, unlocked mortgage rates below 6%, there is speculation on the part of those that watch this marketplace that we could see more people moving into the market in the spring and the summer and beyond, depending on the future direction of mortgage rates and, of course, prices. And that means there's more competition for the relatively low supply of homes that are available for sale. So what is the impact of that? Well, that means more competition. We don't want to get in from a buyer standpoint into another situation of, let's say, multiple bids, more competition. So that's really kind of a mixed bag there. We're going to have to see how it goes. We are moving into the so-called spring home buying season. More people think about moving during the summertime. Families are more mobile if they have children who have a break from school, and really very few people, if we're talking about where you live, where I live, very few people want to be out and looking at homes and front and backyards when it's so cold out there.
Right. And I think, a lot of folks are still holding on to those mortgages that are around 3%. So they're, holding on tight. But the Mortgage Bankers Association released data that mortgage applications were up 2.8% from week to week. So, does the lower mortgage rate encourage people to move overall, would you say?
Yeah, absolutely. And so think about the entirety of the mortgage market. It's not only those who are buying a home, whether it's single family or a condo, it's also those who were stuck at those higher rates when we're talking about 7 and 8%. Now's the time that some of those folks are at least doing the math and thinking about a potential refinancing, and some are refinancing. So the mix of the entire mortgage market is both for home purchases and refinancing. The lower we go, you'll have both more refinancing and people prospectively buying a new home or an existing home.
Yeah, well, maybe it'll be a busier spring. We're just hoping it's a warmer one. I know you are too.
Absolutely.
Thank you so much, Mark.
Thank you.